So I want to welcome us this afternoon to this all-important webinar, Trading Smart with Chart Patterns. Trading Smart with Chart Patterns. All right, so we'll start. Now, in this seminar, webinar rather, you get to know what chart patterns are, how to identify chart patterns, how to generate high probability trading signal using chart pattern. I tell you, I don't know how you've been trading before now, but adding this important topic, to your trading style will improve your results a great deal. And that's why I want you to pay a lot of attention this afternoon as we get started with this class. Take note of the things I will say, and most importantly, learn how to apply this to improve your trading results as a trader. So let's get started. So we say a chart pattern is a visual formation or shape within a price chart that provides clues to what prices might do next. Now take note of the keywords there. A chart pattern is a visual formation or shape, meaning these are things you can identify just by looking at the screen, just by looking at the chart. So it's a visual formation or shape within a price chart that provide clues to what prices might do next. That means that chart patterns are predictive in nature. When you cite a chart pattern, it can tell you what will happen next before the market even goes in that direction. So we say they provide a framework to analyze the battle between the bulls and the bears, and they can help you identify or determine who is winning, allowing traders to position themselves accordingly. So what a chart pattern does is that it gives you that privilege to know ahead what is going to happen. That's why when we do analysis, we will tell you that, okay, we're doing weekly analysis. This week, we're expecting this particular currency pair to either buy or sell. And you discover that in the course of that week, the market goes there. Why? Because we can forecast ahead. So chart pattern is a very, very important analysis tool that can help you to forecast the next major direction of the financial market generally. It works across board. It works for Forex, it works for stocks, it works for indices, commodities, cryptocurrency. It works across board for all financial assets. Now, here is the list of classic chart patterns that we're going to look at this evening. And these are the most consistent patterns. If you go online, you may see some other patterns that are not listed here, but I can guarantee you they are not as consistent as these ones that are listed here. Now we have the double top, double bottom, the head and shoulder / inverse head and shoulder pattern, the rising and falling wedges, the bullish and the bearish rectangles, the bullish and the bearish pennant, and we have the triangles, 3 triangles, symmetrical, ascending, and descending. But the important thing is I'll show you the ones that are more consistent, which you will see more often in the market. Those are the ones we're going to look at in this webinar this afternoon. So we'll start with the first pattern, and that is the double top pattern. The double top pattern. Now we say that chart patterns, they are visual formation or shapes that gives us an insight into what prices might do next. Now, from the word visual formation or shapes, it means that we can identify them when we see them. Now, a double top pattern is close in formation to the letter M. I'm drawing that on the screen right now. Very close in formation to the letter M. When we're writing our alphabet, the letter M, that's what the double top pattern is all about. So how is it formed? Price makes a high, it drops low, goes up a second time to make another high. Now this time around, the first high and the second high forms a resistance level, which drives price downwards. You can see that the letter M is forming. So what we're trading now is a breakout of price. Now there's a neckline region here, which is the tip where the letter M, where it meets. So this region called neckline is very important because we are only going to take a trade when a new candle breaks out below the letter M. That is the second leg of the letter M. And that is basically what we're trading. If you look at the diagram on the second hand, it explains everything clearly. You see price make a high, drop low, and the entry will be below the neckline region. And from then on, you see that price moves massively downward, in the bearish direction. So anytime you see a double top pattern, is an indication that the market is about to break out into the bearish direction. That means that double top pattern generates a sell signal only a sell signal. That is what it generates. So the question is, how do we make entry into this pattern? Two ways. The first way is that we'll look out for the shadow of the candle at the tip of the neckline region. And if you can identify that area, you can place a pending order, a sell stop pending order. So because most times when price breaks out below the neckline, it breaks out massively with a force. Now, if you want to take it manually, of course you can, but then a pending order will trigger you into the trade faster and safer. The second way to enter is to wait for a new candle to close below the neckline region. Now, this is the candle that broke the neckline. At the close of that candle, you may trigger a sell also. The only thing about this one is that you might have missed some movement in the market compared to the person that triggered this entry, using pending order at the tip of the neckline. But both methods are just okay. Pending order or instant execution at the close of the breakout candle. Again, for emphasis, a double top pattern generates a bearish signal, or otherwise called a sell signal, and it is letter M. It forms the letter M, the alphabet M. Now, the next pattern we'll look at is called the double bottom pattern. Now, the double bottom pattern is close to letter W, just like when we write our letter W. So it's called a double bottom pattern. So again, how is this pattern formed? Price makes a low, goes high, drops low. We have the previous low and the current low forming a support, and that drives price upwards. Again, entry will be at the tip of the neckline. You place a pending order, a buy stop order this time around at the tip of the neckline. Or otherwise, you may want to wait for a new candle to close above the neckline to make an instant execution. But I always prefer the pending order. It just takes you into the trade without much effort. Now, what we're trading is the breakout of price above the neckline region upwards. So a double bottom pattern generates a bullish signal or a buy signal. And again, for emphasis, is the letter W. The third pattern is called the head and shoulder pattern. The head and shoulder pattern. Now, how is this pattern formed? Price makes a high, drops, makes a second high. Now, this second high is higher than the previous high. So the first one is called the first shoulder, while the second is called the head. Then price drops lower, goes up again to form the second shoulder. So what we're trading is a breakout of price below the neckline also. Now, we still also have a neckline on the head and shoulder pattern. The area where the two shoulders meet will draw a line across it, and that is called the neckline. So we're going to take our entry. Again, we can use a sell stop pending order, just like the one we set up for the double top pattern. What we're trading here essentially is a breakout of price again below the neckline. So you can put a sell stop pending order at the tip of the shadow of the candle around the neckline. And you can see there's a massive breakout the moment price broke below the neckline region. Again, you may choose to use an instant execution at the close of the breakout candle. And you can see that just like the other one, you may end up missing some opportunity if you want to do that. So it's preferable that you use the sell stop pending order. So the head and shoulder pattern generates a sell signal, and you can see it right on the screen. Now, the opposite of the head and shoulder pattern is the inverse head and shoulder pattern. Inverse head and shoulder pattern. And this is how the inverse head and shoulder pattern forms. Price makes a low, goes high, drops lower, such that the current low is lower than the previous low, and that forms the head. Then we have the second shoulder form, and what we're trading is a breakout of price again above the neckline. And this also will require us to use a buy stop pending order to capture price movement as it breaks out above that region. So an inverse head and shoulder pattern will generate for us a bullish signal. Then we have the rising wedge pattern. This is the third pattern. Don't forget, I've taught you right now the double top, double bottom, head and shoulder, inverse head and shoulder. Now we're looking at the rising wedge pattern. Rising wedge pattern. Now, rising wedge pattern is formed when price has gone up in an uptrend, making a series of higher highs and higher lows. Then we draw a trend line to connect the higher highs and the higher lows together. And the tip where there's a compression here is called the consolidation zone. So what we're going to be trading is the breakout of price out of that consolidation zone. So we look for a candle called the breakout candle, which is this candle that breaks out from within the rising wedge pattern outside of the pattern. So at the close of this candle, that is where you trigger a sell signal. So the rising wedge pattern gives you a sell signal. And next to that will be the falling wedge pattern. Falling wedge pattern is formed in a downtrend. Price is making a series of lower highs and lower lows. Then we'll also wait for a breakout candle, just like we saw in the other pattern. So at the close of this breakout candle, you can trigger a bullish or a buy trade. So falling wedge pattern gives you a bullish signal. Now, the next pattern I'll show also the triangle pattern, and that will be the symmetrical triangle. Now, this is the symmetrical triangle. This is what it looks like. Just like in mathematics, you can draw a triangle. That is exactly what you can see. You are seeing on the screen. We can draw a trend line, both on both sides of price to have this kind of a triangular shape. Now, what is unique about the symmetrical triangle pattern is that price can break out in either direction. It's the only pattern I know at the moment that can give you either a buy or a sell signal in the same pattern. For all the other patterns we've been looking at, they are one directional. Double top, sell, double bottom buy. But this one, you can have either a buy or a sell on the same pattern. So how do we use this pattern? If price breaks out on the upper side of the trend line, it means it's a bullish signal. And if price breaks out on the lower trend line, it means it's a bearish signal. Now, if you're conversant on our platform, I dropped this particular setup yesterday on USD CHF around this time in the afternoon yesterday. So it's a symmetrical triangle, and I indicated with the two arrows that price could break out on either direction. Now, as at this morning, price had broken out to the tune of about 28 pips on the USD CHF. So anywhere the breakout happens, that is the direction where the market is going. And this pattern is very, very unique, and it comes with a high probability. All right, so these are the setups I want to show this afternoon. This, chart patterns. We've looked at 4 specific chart patterns. The double top and double bottom pattern, which will double top will give you a sell signal. Double bottom will give you a buy signal. Let's just go straight to the slide to quickly run through it. All right, double top is for sell. Double bottom is a buy. Head and shoulder is to sell. Inverse head and shoulder is to buy. Rising wedge is to sell. Falling wedge is for a buy signal. And finally, the symmetrical triangle could either be a buy or a sell, depending on where the breakout happens. So you may want to ask me, what about the other patterns I skipped? See, the truth is these ones I've showed you, they are the most consistent you will find, on your charts. And it's not about the numbers, it's about being able to use, even if it's 3, 4, 5, being able to use it effectively. That is what is most important. I'll just take you on the screen on my MetaTrader now and show you a few of these, chart patterns. And then if you have a question, you can ask. So let's go over to MetaTrader. All right, so I'm on MetaTrader now. And this is the setup I posted yesterday on USD CHF. This is a symmetrical triangle on USD CHF, and price broke out to the downside. As at when I sent the update this afternoon, price was in a retracement. Now it's in a continuation. And as we speak, price has dropped to the tune of about 40 pips from yesterday afternoon till now. Now, imagine 40 pips on 0.1 lot. That is $40. $40 with the current exchange rate, that means well above maybe around 70 to 80,000 naira thereabout or more, just on one trade setup which you can find on your chart. I always tell people, the more you know in Forex, the better a trader you become. The more knowledge you can acquire, the better you become. So I believe you are taking note of this. It works. The probability is very high on these patterns. I'll show you a head and shoulder pattern. This is Euro USD on the weekly time frame. And sometimes in the past, we have a shoulder, a head, a second shoulder, neckline, and price broke out massively downwards. Now, this is a weekly time frame. You can find it also, even on 15 minutes time frame, you can find this pattern and it works. Chart pattern works, even on lower time frame. Except for rising and falling wedges, I would advise you be careful. But head and shoulder, double top, double bottom, they work even on 15 minutes time frame. But it's better you can start for like 1 hour. That will give you more consistency. So I've showed you symmetrical head and shoulder. I want to find rising wedge, falling wedge, and double top. Now, another word of caution is this. Some of these patterns now, they may not look as beautiful and clear as what I showed you on the slide, in real life. But with experience, you get accustomed to them and you know that is a pattern being formed when you see them. Now, this is a rising wedge on Euro NZD. I'm anticipating a bearish breakout on this. Yeah, this is still forming, but I will show you the one that had formed in the past. Also, this is EuroCAD, a rising wedge pattern also, where I anticipate a bearish breakout. I was giving an analysis earlier about AUD Now, this is how I analyze the markets. These are things I look out for before I come and tell you that we're buying or selling a particular, financial asset. I was given an outlook on a long-term outlook on the AUD. I was telling some of my students in Lagos yesterday that if price breaks below a certain level, I can tell you that in the next 5 months, this instrument will still be selling. Why? How did I get to know that? It's what I'm seeing on the chart. You see, your ability to interpret the chart will stand you out as a trader because you'll be able to forecast the market better and get better trading results. On the multi-time frame, now please take note the condition for this. Today is the 15th of October. If the market closes by the end of this month with this rejection candle on the AUD please take note of what I'm saying. If that rejection candle fails, well, the setup may change. But if it closes with this rejection candle by the end of the month, I'm seeing the formation of a shoulder, a head, a second shoulder, and a massive breakout on AUD in the coming months. It's going to span for nothing less than 3 months. And it will sell to the tune of about, let me confirm again, to the tune of about 3,000 pips. But it's still futuristic. But I'll show you the ones that has happened in recent time. That's a rising wedge also forming on the CHF JPY, which may lead to a massive bearish breakout. Okay, let me close all this so that I'll just show you. All right. This is a rising wedge on CHF JPY. See the breakout and price drop to the tune of 200 and just 650 pips. These are just random checks. This is an inverse head and shoulder pattern. This is a neckline and price broke out to the upside to the tune of 157 pips. Like I said, Sometimes it may not come out as sharp as what you saw in the slide, but then with the eyes of experience, you will be able to detect it. If you look through any chart over time, you will sight these patterns. This is a falling wedge pattern, and price broke out to the upside to the tune of about 568 pips. 568 pips is a swing. It's not on day trade. It's a swing. It's pan days. But even on a day trade, you could capture between 50 to 100 pips, depending on the volatility of the financial asset you're trading. Okay, so I've showed us a rising wedge, a falling wedge, head and shoulder, inverse head and shoulder, and symmetrical triangle. So I think we've seen virtually all. All right, that'll be the end of the training this afternoon. If you have a question, you can go ahead. You can unmute your mic or you type in the comment section and I will respond to you. Okay, somebody's asking a question already. Good question. Mr. Dauda is asking, is it possible to be using chart pattern alone and still be making consistent money? Well, that question is subjective. It depends. It depends. I would say if you want to use the loan, maybe use on a higher time frame, like 4 hour. It works. But on lower time frame, it's better you combine it with other strategy. Even the 4 hour for more efficiency, you may say combine it with other tools. I mean, like support and resistance will just give additional probability. You know, like head and shoulder, reverse head and shoulder, they work. They work on their own. Double top, double bottom work on that. But like I said, the bigger the time frame, the better result you get with them. Divers admin, what is the best time frame to look at this chart pattern? I would say from 1 hour upwards. Though they may still work on 15 minutes, but don't try to use rising wedge and falling wedge on 15 minutes. You won't get the best result. All right. So as I was saying, it's better off on at least from 1 hour upward. Okay. How can I know a trade will close the day I enter a sell or buy? That depends on the time frame you are trading on. And that's why you need to know the category of trader you are. Either you are a day trader, or sorry, either you're a scalper, a day trader, a swing trader, or a position trader. For scalpers look at small time frame, like between 1 to 15 minutes time frame. Day traders use daily, 4 hour, 1 hour. Swing trader use weekly, daily, and 4 hour. So if your trade will carry over till the next day, is either you're doing day trading or swing trading. Scalping will end same day. But the question should not be whether your trade will end same day. What matters is the result you get. That is what is most important. Because you may enter a wrong trade because you just want it to close same day. Closing same day is not in your power. It's a function of the time frame you're trading. Azan Alfonso's Peter, how can I correctly draw these lines? That is where experience comes in. Practice. For example, the rising wedge. How do you draw rising wedge? You connect higher highs. You use a trend line tool to connect a minimum of 2 higher highs. And you connect a minimum of 2 higher lows together when the market is in an uptrend. Because what we're waiting for is for price to break out to the downside. For rising wedge, price is trending up to break out downward. So what we're trading is that downward breakout after it has moved up and entered the consolidation. In fact, the rising wedge is one of the simplest of those patterns. For double top, double bottom, those are letter M and letter W, which you can cite by yourself. Okay, wow. Thank you for that compliment. Okay, I think I'll be looking more like this then. Thanks. All right. Any other question? The thing is that the more you try this, the more you get accustomed to it, and the more you start seeing the results with it. All right, so I'm not seeing any further question. Don't forget, we have a physical training session twice a week, Tuesdays and Thursdays. So if you happen to live around Lagos and its environment, join us. Tomorrow is Thursday, we're having another physical session. This online session happens twice a week also on Mondays and Wednesdays by 4 p.m. Good question, Mr. Dada. You're saying, is it advisable to start and do analysis every day or on the same pair I trade? Now, this depends on your trading style. If you're going to stick to one currency pair, most likely you'll be doing scalping because scalping works with smaller time frame, 1 minute to 15 minutes. But if you're going to be looking at any analysis from 1 hour, you are likely going to be doing day trading or in some instances swing trading. And with that, you'll be looking at multiple currency pairs because you will not be analyzing the same currency pair on 1 hour every day and be generating signal every day. No, the market doesn't work that way. The bigger the time frame, it means you might look at multiple currency pairs in order to generate a signal. I hope I answered the question, Mr. Dauda. Okay, so we've come to the end of this webinar this afternoon. Please look out in your WhatsApp group. The link will be dropped. I will encourage you to watch this video over and over again to get a clear understanding of this concept. Adeyi, I hope I pronounced that well. Adeyi Gideon Okoyemi. You're saying I'm a newbie. I have no idea at all. My question is that I hope I'm going to cope, sir. All right. Now, this is what I would advise for you. If you're new, start with our software, our market scanner, Auto Chartist. Funny enough, Auto Chartist scans all these patterns also. That's why we encourage you to get that software, the Auto Chartist software. It scans the market with all these patterns and delivers trading signal for you. So I don't know who your account manager is. Try and reach out to your account manager and get the Auto Chartist software. It does all the analysis for you and delivers a signal for you to trade. So you can start with that. Then later on, make sure you attend our physical training session if you are based in Lagos or Abuja, or keep continuing to join us for this online session on Mondays and Wednesdays by 4 p.m. All right. We've come to the end of the training session today. Take care and enjoy the rest of the day. Bye bye.